Hey, it's John from Financial MD. Welcome to another Didactic Minute. I talked in a previous video about the stock market. What is it? How does it pertain to me financially? But I want to drill down a little bit more on a micro level and talk to you today about what is a stock. I think sometimes we assume that people know what stocks are. And I think it would be helpful, even though it may not necessarily affect your daily life. You might be surprised at how much it actually does. So a stock is essentially an individual, or corporations can own them too, but an individual buying a piece of a company. Let's talk about it on a very maybe personal level. Let's say you had a friend who has a painting company and he wants to grow it, so he needs a little bit of cash, and he has decided that he will sell off pieces of his company to investors to essentially become part owners. So he goes to you and offers some to you, and you buy 10%. So you buy a share of his company. It's worth 10% of his company. So now you're a 10% owner of that company. What does that mean? Well, if his company grows in value, he may give you profits each year, and you can go to him someday and say, hey, I want to get my money back, or whatever my 10% is worth. Hopefully, if his business has grown, then that 10% is worth more than it was today. Same thing happens for a publicly traded company. Something like Disney, Amazon, or Facebook, or Apple are all publicly traded companies. You can go to a website like Robinhood or E-Trade and buy one share of that company. Now you own stock in that company. Now they're priced all over the board depending on how well the company's doing. Amazon, for example, is over $2,000 a share. If you want one share of Amazon, you got to fork over $2,000. But now you're a part owner of Amazon. Now keep in mind, there's often hundreds of thousands or millions of shares, millions of investors, so you've got a small fraction of a fraction of a fraction of a percent of that company. But you've got a piece of it. So what does that mean? Well, let's take a look at here. This is Apple's stock app on my iPad. So these are some stocks that I'm watching. Now the Dow Jones and the S&P 500 up here, these are taking a look at the market as a whole. I talked about that in the stock market video. You can see mid-late March, they took a big dip. This was the big coronavirus crash, so to speak, that affected nearly every company. So as we go down here into Amazon, Apple, you can see all of these companies took a big dip around that time. But most of the tech companies, these big ones, have started to recover pretty significantly. Not back up to where they were in mid-late February, but up there and starting to see some good recovery. Got Snapchat, Facebook. You can see down here at Ford, that took a crash as well, hasn't quite recovered quite as well. And that is indicative of the difference between some of these big tech companies who people are using still during the pandemic and during the quarantine. Ford, a manufacturing company, not quite as much. So they're still suffering. We've seen things in the news about Boeing, who manufactures airplanes, obviously taking a big hit. And a lot of other manufacturing companies that aren't necessarily being used right now. So getting back to my original topic today, a stock is you as an individual buying a share of that company. Now you have some ownership, you can keep it. You can get what's called dividends off some of the bigger companies where they share some profits with their stockholders every quarter. And or you can hold that company hoping that it raises in value, and then when you sell it, you've made some money. That's how a stock works in basic terms. In your 401k and in your IRA, you own stock. If you own a mutual fund that also owns stock, then you own some stock. And we'll get that into a little bit more detail when we talk about mutual funds. But that's it about stocks. This is John from Financial MD with today's Didactic Minute. We'll see you next time.